You're watching the One-Eyed Monkey Channel, where tech, gadgets, and Bitcoin collide. Welcome back. Today we're diving into something, well, it's pretty wild. We're going to explore a radical financial strategy for how you could, theoretically, live your life and pay all your bills while owning absolutely $0. We're going to break down the playbook of a man who actually does it. I mean, just think about that for a second. It's a real mind bender, right? Imagine your entire net worth is in Bitcoin. You need cash for rent, for groceries, for gas. But selling your Bitcoin triggers a huge tax bill. And, well, you don't want to shrink your stack. So what's the move? Well, let's meet the guy at the center of this whole idea, Jack Mallers. He's the CEO of Strike, which is a big deal in the Bitcoin payments world. And he is famous for saying that he holds zip, nada, in US dollars. His entire fortune, it's all in Bitcoin. And this quote, this really gets to the heart of his entire philosophy. He basically sees government-issued cash as a melting ice cube because of inflation. For him, Bitcoin is the real deal, the ultimate store of value. It's not just some investment, it's the future of money. But, philosophy doesn't pay the bills, which brings us to the core of his strategy. The secret sauce, the absolute key to this whole thing is he doesn't sell, ever. Instead, he basically turns his Bitcoin stack into his own personal bank. He can generate all the cash he needs for expenses without ever giving up ownership of his precious coins. So how does he do it? It's all about a simple but really powerful financial tool, a collateralized loan. Okay, so it works in 4 basic steps. First, you put up your Bitcoin as collateral with a lender. Simple enough. Second, you borrow US dollars against it. Third, you take that cash and you spend it on whatever you need. Mortgage, car, you name it. And fourth, and this is where the magic really happens, as your Bitcoin's value goes up over time, you can refinance. You take out a new loan to pay off the old one and pull out more cash for next year's expenses. You just rinse and repeat. Now, to really get a handle on the risk here, we have to know one key term, loan to value, or LTV. It's just a simple ratio, the size of your loan divided by the value of your collateral. And all you need to remember is this. The lower your LTV, the bigger your safety buffer is if the market takes a nosedive. Keeping this number as low as possible is the name of the game. All right, theory is great, but let's see how this actually plays out in the real world. We're going to run a simulation based on the source data. Let's imagine we start with 3 Bitcoin, and we need to borrow $30,000 every single year for living expenses. And we'll assume Bitcoin grows at a pretty healthy 30% a year. So right at the starting line, year 0. Our 3 Bitcoin are worth $360,000. We take out our first $30,000 loan. Now, notice that LTV, it's a super safe 8.3%. And our net worth, our equity, is still a very healthy $330,000. Now, let's jump ahead 5 years. We've been borrowing that $30,000 every year, so yeah, our total loan has grown to over $230,000. But look at what our Bitcoin is worth. It's shot up to over $1.3 million. Our LTV is still a totally comfortable 17%, and our equity, well, it's just exploded. And here's the bottom line. Even while taking on more debt every single year, our net worth has more than tripled to over $1.1 million. That's the power of the whole strategy right there. Your asset is growing way faster than your debt. Okay, now let's play the long game. Fast forward to the 20-year mark and, wow, it's almost hard to believe. Your Bitcoin is now worth a staggering $69 million. Your total loan is about $2 million, sure, but your LTV has dropped to a tiny 3.1%. Your debt is practically a rounding error compared to your assets. Your equity is nearly $67 million. And this brings us to maybe the biggest reason people do this, taxes. See, if you had sold $30,000 of Bitcoin each year, you'd be paying thousands in capital gains tax. But because a loan isn't considered income, borrowing is a zero tax event. That is a massive annual saving. But, and this is a huge but, before you run off to mortgage your Bitcoin, we have to talk about the dark side. Because this strategy, as powerful as it seems, is absolutely loaded with risk. If things don't go according to plan, they can go very wrong very fast. The biggest monster under the bed, of course, is volatility. That awesome 30% growth that makes you rich in our simulation, it's a double-edged sword. A really sharp crash, say 70 or 80%, could cause your LTV to spike into the danger zone. that can trigger a margin call, or even worse, your lender could be forced to sell your collateral to cover the loan. And just like that, you could lose everything. And there are other hidden dangers too. I mean, what if Bitcoin's growth just flattens out and it's less than your 10% interest rate? Your debt would start growing faster than your asset. What if your lender suddenly changes the rules? Or what if governments decide to start taxing these kinds of loans? Oh, and don't forget inflation. That 30,000 you borrow in year 1 buys a whole lot less 20 years from now. So if this is so incredibly risky, why does it work so well for someone like Jack Mallers? Well, the simple answer is that the rules of the game are completely different when you're a whale playing with a massive stock of chips. Mallers has 3 key advantages. First, just sheer scale. When you have something like $100 million in Bitcoin, you can borrow millions, and your LTV will still be microscopic, making it almost impossible to get liquidated. Second, he has this deep, unwavering conviction that Bitcoin will replace fiat currency. He's betting the farm. And third, for him, this isn't just a strategy, it's the ultimate tax hack, saving him millions and millions in capital gains every year. Which really brings us to our final question, doesn't it? Is what we're seeing here a glimpse into the future of personal finance? A world where we borrow against our growing assets instead of selling them? Or is this whole thing just a high-stakes financial game, a powerful tool for the crypto rich, but an incredibly dangerous gamble for everyone else? That's something to think about. Thanks for watching.